How far into this AI bull run are we? So look, this is NASDAQ 100 hottest stocks, 2000 versus 2026. So strategy back in the dot-com boom, up 1,260%. SanDisk is now up 3,960%. Qualcomm, 1,200% back in 2000. Western Digital, 933% now. You can see that some of these stocks have just been running absolutely bonkers crazy zone, man. Some of these things are the returns that we're seeing on some of these stocks right now are truly epic. This AI bull run has been insane. I mean, some of these stocks, NASDAQ's top winners today are up on average 784% past the dot-com peak of 622%. These are crazy times, ladies and gentlemen. The stock market is absolutely nuts. The question though becomes is the AI bubble about to pop? And when you see things like SanDisk, which is absolutely nuts right now, SanDisk on the monthly RSI is 98. 98 on the monthly RSI. This is a crazy, crazy number. No, you don't understand. A monthly RSI of 98. Oh, it's so overbought. It's insane. The level of hype that's been chasing these things. But here's the thing, too. It's not to say there's other stocks that are not good opportunities right now, but people are going to chase SanDisk or Micron or whatever after they put in these mind-boggling gains. And this 784% average is really just weighted towards SanDisk because it's gone up so much. But yeah, it's been a pretty wild run on some of these stocks. And things are very overheated. However, you have to remember back in 99, 2000, none of these companies really had any revenue. It was all a mirage back then. People were getting very excited about internet stocks. They ran all these names up massively, and there wasn't really a lot to back it. A lot of these things were, let's say, a bit of a mirage. The proposition now is very different because the price to earnings ratio for Micron Tech is like 7 or 8x. It's insane. It actually feels undervalued despite having gone up 700%. And the story is very similar across a lot of these AI players because we're having $1 trillion in capex from the hyperscalers this year. These numbers are absolutely crazy. It's off the charts. Kabizi let us share this one. Historic divergence. The ratio of the S&P 500 information technology sector to the S&P 500 itself is up to a record 0.87. The ratio has risen 50% since the 2022 bear market low. This is the AI tech bull run, in case you haven't figured it out yet. Meanwhile, the number of employees in the information technology sector relative to total U.S. non-farm payrolls is down to 0.02, an all-time low. You can thank AI for that because we're basically doing a lot more with a lot less these days, which is a good thing, but it's also a bit problematic for, people and having jobs and being able to buy dog coins later. CEO of NVIDIA, Jensen Huang, said agentic AI requires 1,000x more compute than generative AI, comparing the shift to the world suddenly needing 1,000x more cars. And this is the thing. People are going to say, well, the AI bubble is going to pop any second. Have you seen SanDisk? And they're right. SanDisk is ridiculous right now. The memory stocks like SanDisk or Micron have gone on insane runs. But then you realize the future we're heading towards, the agentic AI future, requires 1,000x more compute. The question becomes is how soon does the agentic AI future become the agentic AI now? If it's not happening for another 5 years, we have problems. But the way AI is going and the way that high agency people are currently adopting it, maybe that reality is a lot closer than we think. And in that situation, you have, despite the insane rally in some of these stocks in particular, you may have a situation where things keep going for longer than people can expect. Now there'll be big corrections, and some of these big names right now that everyone's hyped up will have the biggest corrections, but then others, then we'll go back, data center is going to be the big thing again, and so on and so forth, and we'll see some rotations between these different things. Larry Fink just called AI a once-in-a-century investment opportunity, not a bubble, but a supply crunch. And that's a lot of where the situation is right now. It's not the bubble conversation, and there's some definite froth, and there's some definite crazy valuations going on, but the supply of memory, the supply of GPUs, the supply of energy, all of this stuff is in dire need, and the demand for it is off the charts. Copper, all these data centers, what do you think they're going to put in them? Copper wiring, that's what. COPEX ETF to the moon, guys. That's the long and short of that. Jeff Weniger posted this. Microsoft having capital expenditures equal to 37% of its revenues would have been unthinkable a decade ago. This is supposed to be a software company, with these numbers you see for an industrial company, an oil or gas play or a railroad or something like that. Yeah. Very, very big capex. Think about this. Microsoft, 37%. That's crazy. These are insane numbers. But as long as the CapEx spending continues, the whole AI Ouroboros snake eating its own tail thing will continue to pump up the valuations of all these stocks because memory will remain in demand and all the rest of it, right? Market cap weightings. The U.S. tech sector has never been this large. Tech and tech-related stocks that make up 57% of the total U.S. market, a record high. This is 6 to 7 percentage points higher than at the 2000 dot-com bubble peak. Again, there's a lot of bubbly signs out there. The froth in the market is very, very real, and the valuations on some of these things are getting crazy, but the demand has not let up yet. That's the equation. That's the tricky part. Every massive bubble bursts at some point, and the AI bubble will be no different. The question is, can we run for another year or two? Paul Tudor Jones, I shared with you guys last week, Paul Tudor Jones, he's buying AI stocks at these valuations. Crazy, man. Overseas investors are pouring into U.S. stocks at a record pace with equity allocations hitting 63%. Why U.S. equities? Because that's where all the good shit is, man. That's where you can get Micron and SanDisk and all these big IPOs that are coming up, which honestly are all massively overvalued, but that's not going to stop investors from pouring their money into these things at the absolute peak top. The U.S. received $2.1 trillion of new net inflows in equities and fixed income in the past year and a half, while the rest of the G10 have seen zero. Zero, guys. These are some crazy numbers when you really think about it. It's just nuts. It's just nuts. A lot of people watch the channel. A lot of people watch the videos, but not everybody is subscribed. So if you can take a quick second, if you're watching this, you're not subscribed yet, click the subscribe button. Helps us out a lot. Helps make sure that this message gets to you, that you'll receive these videos in the future, because we're going to be chopping these videos down as well into smaller parts. So for people who don't watch the whole live stream, but you want to watch, hey, what's going on with the AI trade? Is that still a thing or not? Is the bubble popping? Well, we're going to put these out in smaller videos for you too. So make sure you're subscribed. And if you're watching the stream, man, take a quick second and hit that like button. We appreciate it. Thank you so much. So real quick, this is an interesting one. We'll try to get to a couple of questions from you guys real quick before we get into the interview with Scott here in about 5 minutes. But I just want to share this story with you guys real quickly. Golfers putted better. This is about the idea of perception, okay? Because it's really interesting. Because think about this as an investor, okay? Golfers putted better when they were told the putter had belonged to a pro golfer. They even perceived the hole as larger. Belief changes what the body does and what the brain sees. So if you wake up every day and say, I suck at investing, I suck at trading, my health, what are you going to do about it? I can't make it to the gym, everything's crap. Where's your reality going to go? This is serious stuff, okay? Tony Robbins, all these people talk about this stuff all the time. Belief changes what the body does. Think about it. Think about how you can apply that. The positive beliefs, because a lot of us are stuck with a lot of negative beliefs, and we grew up in households where money wasn't frequent or common or abundant. And as a result, the beliefs that we have about money and our ability to make money, not the best in most cases. So because of that, perhaps it's worth looking to yourself and saying, you know what are some of the beliefs that I have right now that I could potentially look at and examine and maybe update some of that programming that I've had, put some new software in my brain that could help me look at things in a different way and not give in to all the doomer shit that the mainstream media is pouring out every day. This is an interesting one too, about perception. Brandon Liu posted this: in a blind taste test, people preferred Pepsi over Coke, but when the brand labels appeared, most shifted toward Coke. That shift disappeared in people with damage to a brain region involved in emotion and decision making. The takeaway here is find a way to get brain damage. Brain damage enough to... Just the right amount of brain damage. That's all you need, guys. That's all you need.